What I was gonna do today is selling cover calls against my holdings in stock ticker O, which is Realty Income. Now, as you guys can see, I am profiting about just over 6.5% on my holdings. Today, Realty Income is trading at about 64 bucks a share, and I'm carrying it at 60 bucks a share. So I already have a profit of 4 bucks a share, and when you guys write cover calls, the idea is that you already have equity in the underlying stock, okay? So in that case, even if the shares are gonna be called away from you, you are gonna profit on the appreciation side, and you're gonna profit collecting the premium, okay? So that's exactly what I'm gonna do, and I'm gonna show you guys a real life example of how this can be a win-win situation regardless of what the stock price does. Now, I don't really think about the stock price a lot. I'm only in for the income, okay? So I think in terms of numbers of shares. If we look into Realty Income here, this is the option chain, and since I'm carrying it at 60, like you guys saw, every tax lot that I have, it is in the green. So I'm gonna profit regardless. Now, of course, if you do have lots in the red, you might wanna swap lot selection, and it depends on what you want to do. If you want the first in, first out, or last in, last out, or lower cost out, you can change the settings on there on your brokerage website. But regardless, because every one of my lots is in the green, I don't have to worry about doing that. Now here I'm looking at a strike price of 65. That would deposit into my account about 20, I would say. You know, if you guys see the bid and ask spread, 15 cents a share to 30 cents a share, let's just call it 20 cents a share, okay? Now I'm already profiting 4 bucks a share, which I have in unrealized gains. So what are these scenarios? If I was to write a cover call at a 65 strike price, okay, if shares are gonna be called away from me, of course I'm gonna profit 5 bucks a share plus the 20 cents a share that I have on the premium. So you're talking about $5, 20 cents a share on an investment of $64 a share. So that is about an 8%. I'm gonna make 8% on my money, and the expiration is February 20th. which is 10 days away from today's date. Today is February 10th. Okay? So making 8% on your money, I think it doesn't get any better than that over the next 10 days. But regardless, that is one scenario. Now, as you guys know, Realty Income is very well known to pay dividends. Now, of course, now this one stock has been going up recently. Over the past year, has been trading in between, I would say, about 55 and 60. Today is trading just a little over 64. Like you see, it's been in a good uptrend here. But the good thing about the stock is that it pays dividends, and it pays monthly dividends. Dividend yield is about 5% right there. And this pays ex-dividend day, usually it's right about the end of the month or the very first of the month. Like you see here, January 30th. That was the last ex-dividend day. And it pays 27 cents a share. 27 cents a share. Okay, let's see at the dividend history. February last year they paid February 3rd. That was the ex-dividend day last year. So I would expect that and in March last year they pay March 3rd. So the expiration of the option is February the 20th. So of course, if the shares are going to be called away from me February 20th, well then in that case I'm not going to collect the dividend, but the shares are going to be called away. I can still buy those shares. That means that I have cash in the bank. Okay, and I am going to acquire more shares with that money and possibly buy DCA up until ex-dividend day, which probably is going to be right around March 3rd, 2026, regardless. But regardless, let's say that I keep the shares. So I'm going to profit 27 cents a share for the dividend, plus I am going to make the 20 cents a share of the premium. That is, of course, 47 cents a share. 47 cents a share, 64 bucks a share. Okay, I am making nearly 1%. Well, nearly 1% on my money in a week and a half. I still think that is pretty cool because, you know, you get to keep the share. You know, you have unrealized appreciation. You collect the dividend and you collect the premium. So I'm gonna go ahead and do that. And it makes a lot of sense doing that to me. Now again, this is my income account. I have a couple of income accounts primarily, and they fuel the rest of my other accounts, which I have about 8 or 9 of them. I use different strategies to make money on each one of them. Like I have a growth account, a speculation account, and so on. I do buy bonds, ETFs, etc. But regardless, On this one, I am primarily focused on the income, so I'm not really worried about my net assets on this, but as much as generating income. So, like you guys see, I own currently 343 shares of real income, and 100 shares of those are already tied up in another cover call, okay, with expiration February 20th at a strike price of 62.50. Now, because the price went up on real income, today I believe it's trading up 1.5%. Today, the whole real estate sector is up. Okay, now tomorrow it could be different. But anyways, I think the real estate sector has been going up every day in the past 3-4 sessions. Well, regardless, I'm not gonna buy any more of this today because the other thing that I could do is buy 56 more shares. That's gonna put me at 400 shares. In that case, I could write 3 contracts, but I might do that tomorrow or by the end of the week and see what the price is at. Now, real income does not have weekly expirations like you guys see here on the under the options tab. February 20th, then it jumps to March 20th, and then June 18th. Okay, so like there are stocks or ETFs that are more, let's say, there is more demand, and they have expiration dates on a weekly basis. More frequently, but regardless, the expiration on real income is February 20th. So let me go back my E-Trade. Okay, this allows me to write 2 more contracts. Let me go ahead and do that. Real income. Let's go under the options tab here. Okay, those are the options. Expiration February 20th. The strike price is gonna be 65. And also notice that like the strike price, you got one at 65, the next one is 67.5, which doesn't pay a lot in premium. So regardless, I'm gonna put this at 65. Again, I feel like this is a no-brainer. It's a win-win situation regardless. Doesn't matter what happens. It's not gonna put a lot of money in my pocket, but I mean, a couple of contracts of this, those are probably $50. I mean, you're talking about $50, zero risk. I mean, the shares are gonna be called away. That's fine. I make the profit. I make the appreciation. I make the premium, and I still have time to buy those shares. Again, you know, if I want to collect the premium. Now, of course, if the shares are going to be called away, that means that the stock price is trading at a level above 65. But even if it's trading at 66, I still have cash from the proceeds of the sale, and I can buy the same shares. It doesn't really matter to me a lot, and I can collect the premium regardless on March 3rd. So in this case, when you already have a good paying dividend stock and you already have equity in it, it makes all the sense in the world to sell a cover call against it. So let me go ahead and do that. Like if I was to put 30 cents a share, that's where I'm at. That's a call. I'm gonna sell to open. I'm gonna do that on two contracts. Expiration February 20th. The strike price is 65. That's a call. Now that was the last price, 27 cents a share. I'm gonna put here market. Okay, everything looks good. February 20th, good for the day. Place order. Okay, I already got notified on my phone. And actually, the cool thing is that it sold nearly the upper limit. The upper limit was 30 cents a share, and it sold it at 29 cents a share. I don't know if you guys can see the very first notification where it says 29 cents a share. Okay, so that translates in 58 bucks deposited in my account, and that's how you guys generate income. Okay, now it took me 5-10 minutes for the sake of the video. In reality, I can do this in the same amount of time it takes to place my Uber Eats or DoorDash food delivery order. And that's how you generate income. It's as easy as that. Well, happy trading everyone, and take care and take action.